Myself Vaibhav. In today's session of Visual JForex, we will be continuing our algorithm development work using the indicator Relative Momentum Index RMI. This is the third and the final session in which I will be trying to complete the algorithm and we will see how we can then test it using the historical data also. So let's get started. I will give you a brief refresher behind the logic of the algorithm. This is the Visual JForex board which has been developed by the Dukascopy Bank SA. Let us look at the idea. This is based on the hourly time frame and I have also plotted the RMI with the default values. And in the last session, I had explained to you how we can design the algorithm to execute the buy trade. Now the focus is going to be on the designing and the development of the sell side. So I will be explaining the sell side only. And if you want to take a look on the buy side also, you should refer to the earlier video. The idea is fairly simple. We want the trade to be executed when we have the bearish momentum for the underlying instrument, and RMI gives us the idea whether the underlying momentum is bullish or bearish. And as you might be aware, traditionally speaking, we consider the value of the RMI above 50 as bullish, and if it is below 50, that is considered bearish. So we are adapting the similar requirement for our algorithm also. We want the last hour's RMI output value should be below 50, and in the last couple of hours we are going back to the extent of 6 hours. In that point in time also the RMI value should be below 50. So that is to make sure that the bearishness has been consistently there for last couple of hours, and after due correction we want to execute the trade as and when we see that the bearish momentum is again gaining strength, and we can expect a fresh move on the lower side. And to rely on that, we are using the combination of three RMI blocks of the hourly time frame. One is the last, another block is of shift value 2, the penultimate hour, and third block is going to be of the shift value 6. So that will help us retrieve the RMI output 6 hours back. And the penultimate hours RMI output should also be below 50. And with these three indicator blocks, giving the RMI output below 50 consistently means the underlying momentum has been bearish, and to make sure we are executing the trade only when the momentum is gaining strength, we will be adding the condition that the last hour's RMI value should be not only below 50 but also below 45, and in the prior hour the value should have been above 45 but below 50. So that means we can now look forward to the fresh initiation of the trade. So now we go back to the Visual JForex board. This is the setup done so far, and in the prior session the instrument subscription was done, the position amount was defined at 0. Then I got these RMI blocks of the hourly time frame with the look back period of 1, 2 and 6 respectively. We are also relying on the hourly candle, get historical candle of 1 hour time frame to look at the price action immediately prior to the execution of the trade. To pinpoint the exact entry point, these 10-second candles will be used, and in these calculation expression blocks these values were defined here. In this case the minimum difference of 6 pips is being defined. So this 6 pips value will be compared to the actual price difference of the last hour's closing and opening value, and using this difference the Another calculation was done to get 30% of the calculation, this prior calculation, and deduct that value from the last tick bit to arrive at the appropriate execution price for the buy side trade. In today's session, I will have to look at the calculation for figuring out the last hour's candle closing and opening difference, since the earlier setup required only the execution of the buy trade. The opening price was deducted from the closing price, but for the sell side we need the closing price to be below the opening price. So now this time around I will have to deduct the candle 25 candle open from the candle 25, the candle 25 candle close will need to be deducted from candle 25 candle open, and then whatever is the difference we will take 30% of it and add that to the last tick ask to arrive at the execution point for the sale trade. So let us get started. The lower side, this setup is ready for the execution of the buy trade, and one variable needs to be defined here, and we were going to define it for 1 hour order validity, which will be done in this session. As we were short on time last time around, I had left it blank. The calculation expression box, I think 4 will be needed, one for defining the order validity. Last hour get historical candle is being defined by candle 25. So I will deduct the candle 25's closing value from the opening value, and the difference should be more than 6 pips. This will be A1 minus A2 we will multiply this difference by 0.3. I think this was the variable. Yes, it is. A1 into A2 We will be placing a limit order. So whatever is the 30% of the last hour's candles opening and the closing difference, we will add it A1 plus A2, and to define the order validity, new calculation will need to be done, and we now in 1 hour we have 3.6 million ticks. So all we need to do is take the tick time, last tick time, and add 3.6 million ticks to it. I hope I am right. A1 plus A2. If you want to keep the order validity for a different time, suppose 2 hours, 1.5 hours, or 3 hours, and so on, all you have to do is multiply this A2 with the appropriate value, appropriate variable, and then add it to the last tick time. You will get the desired validity. Uh, I forgot, this is the data type which I created last. That variable was of double format, but we will need the data type to be long, so I will leave it blank and get this block. And create a new variable. Okay, now it's fine. Now let us start defining the conditions for the execution of the sell trade. And I want to make sure that the buy side and the sell side conditions are symmetrical. So we will have to make sure that the number of if blocks matches the number of if blocks we use while defining the buy trade requirements. These are 9 if blocks, so the same number of if blocks should also be used this time around. The conditions should be mirror images of each other. The RMI value 6 hours back should have been below 50. first input less than second input. The RMI value for penultimate hour should have been above 40, but below 50. So here the out 23, this value should have been above 40, which means first input is less than second input. And again, this should be below 50. Last hour's RMI value should have been below 45. But so as to make sure that we don't really execute the trade after too much fall have already taken place. One condition will also be placed that last hour's RMI value should still be above 40. And I think if we don't use this condition, then also it's fine. It will save us one if blow. So for that, we will modify it a bit and place the condition that this penultimate hours RMI value should have been above 45. Okay, so as RMI comparison is to be done, I think we are almost finished with that. Now we can shift our attention to defining the conditions using the get historical candle blocks. Last hour's closing value needs to be below the opening value, for which we have already carried out the calculation. So we won't be looking at that. But the candle 26, which is the candle with the look back period of 2, its closing value needs to be above its opening price, so as to make sure that there has been some correction, and now after the correction we are again seeing the move on the lower side. So here candle 26 closing and the opening value will need to be compared, and candle 26 close should have been above candle 26 candle open. Okay, we need a couple of blocks more. First input greater than second input. Okay, and after that we will compare the actual difference between the opening and the closing value to the predefined minimum requirement, and it should be more than 6 pips. First input greater than second input, and then all we have to do is compare the last two candle values of 10 seconds each with the hourly close. So we need candle 27 candle close to be below the candle 26 candle close, while the candle 28 candle close was above the candle 26 candle close. So we'll need to take this value as a second variable, and here first input less than second input, and this was higher, so first input greater than second input, and after that the pending open block will come in play. First input greater than second input, this is going to be a limit order, sell limit, price is going to be the output value of the calculation. So that is the 30% of the last hour's closing and the opening price difference, which is being added to the last tick ask. Default instrument will remain as it is. Trade amount I will change to 0.1 million. The page will be 2 pips. Stop loss and take profit, we will keep it the same as we have kept for the buy side, and also the order validity will be the same. I'll use this output value generated, and that means order validity for the sell side trade will also be 1 hour. Now let us arrange these blocks. As you can see, we have the setup which is symmetric. We had 9 requirements for the execution of the buy trade, and for the sell side, the number of conditions which need to be fulfilled is also similar. Stop loss and take profit will also be the same. We are using the combination of 15 pips for stop loss and 30 pips for the take profit to make sure that the risk reward ratio is 1:2. With this, the algorithm is fully complete, and once you are done with that, you can export the file using this option provided to you in a Java format, and then you can take it to the JForex account, and here you get the option strategies, and you can look at the file on your PC and retrieve that file and run the historical test on the historical data. So that's how you can see whether the structure which we have made is good enough in the market conditions or not, and depending on the outcome you can fine tune certain requirements, or if you feel the profitability is good enough you can use it for the trading in a real-time environment. So that's it from my side for today's session. I hope you have been able to understand the logic behind this algorithm using the RMI, Relative Momentum Index. If you have any idea or any query to share, you can write to me in the feedback section, and I will be more than happy to take the discussion forward. Thank you all for joining in. See you next time. Do subscribe to the Dukascopy webinar channel to stay updated on market developments. Goodbye.